I'm going to go backtrack quickly to the transferring of ownership of
Yes.
the Cape Town property
Yes.
from your personal names into the business. Have you drawn up a sale agreement or
Not yet, no.
not yet? Okay.
No.
So essentially what I propose is that a sale agreement be drawn up between yourselves, your own DOS, deed of sale.
We did exactly the same with the other two properties. The only difference is I didn't raise a bond on those two properties.
It was
I
just
did
a
loan
transfer.
account.
Okay.
Yeah.
Same concept applies. It will just have a mortgage bond clause now added, subject to
Okay.
bond approval, right? Now, the bond approval, we can raise the 800. It's not a problem, but then the transfer attorneys will need guarantees for the difference so that they can effectively do the transfer. Or we can raise the full bond of
Yeah.
up to the full purchase price because your affordability is fine. And then all you do is you literally just take whatever excess that you're going to get paid out and pay that into the access bond, and then you just take out what you need as and when you need it. So we essentially raise an access facility on this
Right.
on this whole transfer, go up to the full purchase price, up to the
Yes.
2.5. You take out as and what you need and only pay on as and what you use.
The only thing that comes to mind now is if I raise for the full 2.5, I'm paying transfer fees for 2.5.
I agree. You see, this is something that's besides my finance raising process. Just a
Yes.
disclaimer here. I'm
Yes.
just foreseeing and preempting what will take place with SARS at the transfer attorney's office. So
Right.
if we do a purchase price of 800K, this is
Yes.
what may be flagged. When we submit it and they see, the sale or the sellers are also, they're the one in the same, right? The sellers are the same as the buyers essentially, because it's just an entity that separates them. If that line is drawn with SARS, whoever issues the clearance, they could throw it out and say, no, duties need to be charged on the current market value.
Okay.
So just the
So
FYI.
it may be inevitable that I'd have to pay that anyway. I wanted the payment to go through the business. That's why I wanted to raise a bond.
To offset.
Because otherwise I can't claim the interest and
correct.
everything from an expense point of view.
Correct.
And I want the asset to lie in the property,
Yes,
in
100%.
the property company.
100%, yeah.
Okay, so my only risk here really, well, there's
Is
two risks, I
duties.
suppose, is the duties, and that SARS might come back and say, well, there's capital gains.